Regardless to your current portfolio, there are 5 stocks that will perform very well in the case of a market crash, which can happen anytime. And we don't beat around the bush on this channel. The first one is Facebook. And the first reason why Facebook is a prime candidate to be market crash proof is because it's a very strong dominator of the social media scene. And so as you can see, this is the number of total users on Facebook, and as you can see, they have now reached almost 3 billion. Yes, a lot of people. On top of that, they're also on Instagram, and at the time of recording, the latest number says that it's over 1 billion people. And not only that, there are literally no other company being able to hold the candle to Facebook, which I made a full-blown video about, and I'm gonna link it at the end of this video if you want to know more about Facebook. But the second stock that is gonna be stock market crash proof is Tesla. And one of the reasons is because Tesla has got revenues that are growing so much compared to all the other competitors, because obviously electric vehicles are selling a lot. And this is what you have on the screen. So for example, for this year, the increment in revenues will be over 60%. That's obviously an estimate, but then next year it will be another 35%. And so this is where we are heading. Incredible revenues, incredible EBITDA, that is in spite of inflation. But obviously Tesla is not the only company making electric vehicles, and actually the other competitors are working very hard to fight against them, which is one of the risks. But let me show you where they are in terms of market share. And by the way, a market crash can happen anytime, so stick around if you want to make the most out of your investments, because this is what this channel is about. So this is the global plug-in electric vehicle market share for the first half of 2021. I don't think anyone is talking about it, but Tesla has got a whopping 14.5% market share of the overall, obviously, market, not just the US, but that's global. And second one, the only one being able to hold the candle to Tesla is the VW Group with 12.5%, which is quite a lot. Then GM is 8%, Stellaris is 6.4%, and all the others have got way less than 10% or even less. And so as you would expect, Tesla has got the leadership in terms of market share. And not only that, remember that Tesla has got AI and also autopilot going on. They have a leadership in that as well for the automotive industry, which is obviously very important. The autopilot will be the next big thing that will hit the market and eventually become the only way we are gonna move by car. So imagine Tesla is the leader in that. And the third company to keep an eye on in a market crash and even buy is Palantir. And hopefully it's not your first day talking about Palantir, but basically it's a company that has got a lot of contracts with the government, and it's got the majority of their revenues with the US government. And so last time that they reported their earnings, their revenue from the government was 208 million. That is to say that at the time of recording, 2/3 of their revenues is from the government. But if you look at the overall commercial market, this is what we look at right now. So the biggest player, Apache Hadoop, they have 23.46%. That's the first player, as you can see. So Palantir has got only 2.6%. And so you can speculate that Palantir may be able to take over some of the market share from Apache Hadoop. But that is because Palantir will be able to leverage their contracts with the government that give them that extra stability that a government can give. Now remember that this is perhaps one of the most speculative plays that you could make in a market crash, but you can understand that is something that is very strong and inflation proof, because they have a software, so they don't have to spend extra money to scale up their software. They can just issue more users and copies. They obviously have to spend in R&D to develop it, but that's something that all companies have to do. And also, and this is very important, the revenues, and these are the estimates going forward, and to be honest, they're very conservative. It seems that in this year, 2021, Palantir will be able to increase their revenues by 37% overall, and then in 2022, another 30%. But most importantly, their EBITDA margin meaning how much they make overall on this revenue increase, will stay 28-27%, so very high. And so I hope you understand the direction of these stock picks. When the market is going south, you want to pick companies that are stable, that are sure to make money going forward, or that are dominating the market. Better again, if they have a total monopoly, is better for you as an investor when you put your money into them. Speaking of which, the next company to invest in on a market crash is Google. And this is the reason to buy into Google. They have an absolute dominance of the search engine market. So as you can see, this is insane, guys. I've never seen anyone talking about it, but look at that. 92% of the searches in August 2021, so at the time of recording, is through Google. That is insane, 92%, and that's been like that for the foreseeable future. Literally no one has ever been able to take away most of the searches. As you can see, all the competitors, and Bing is the one with the most searches compared to Google, has got only the beauty of 2.4%. The rest is all with Google. And as you can imagine, this total supremacy in terms of search engine market obviously leads to incredible revenues from advertiser and things like that, not even considering YouTube obviously. So let's have a look at what kind of revenues Google make and the forecast for the future. And so this is Alphabet, so Google. And so as you can see, even if we are looking at a company that is already making insane revenues, one of the biggest companies in the market, this year it is expected to grow 37%, which is an incredible growth. On top of that, their EBITDA margins are 40%. Last year they were 37%. This year it could be even higher. Then in 2022, the increase in revenue should be lower, but still sizable, 16%, and again, EBITDA margin of 39%, so more or less on the same level as this year. And again, these are just top level analysis of these stocks, but just to tell you that these companies can really bounce back very well when the market crashes. They will be the very first companies to go up because investors are able to trust them. And I will make a new video on Google, so stick around. But the next company that you should keep on your watch list and probably buy is AMD. The reason why AMD could be a very good candidate, and again, a very speculative play, again, almost like Palantir, but mostly because we have two behemoths fighting for the supremacy. So we have AMD, which is the red line, and Intel, which is the blue line. Now, Intel has been reducing and losing market share for the last 5 years, since 2016, whereas AMD has been actually gaining that market share. So as you can see, at the time of recording, they are basically fighting for the leadership. 2021 seems to be a year where they're both losing and they have inverted the trajectory. So time will tell, but it's very important to see that the revenues for AMD are really growing and have been growing for the last 5 years. And if you want to see a more in-depth analysis of Facebook, click on this video. Thank you for watching, and I'll see you next time.